If you own crypto, even a small amount, then this video is for you because the IRS is cracking down on crypto holders, and I don't want you to make one of these mistakes that could trigger an IRS letter. I've been filing my own crypto taxes for the past 6 years, and I've also interviewed a crypto tax expert in the past when I worked for a large media brand, so I want to share what I've learned over the years with you. But before covering the mistakes I've seen people make while running this channel, first, let's define what is and isn't considered a taxable transaction according to the IRS, starting with what is. Anytime you dispose of a crypto asset, that can trigger a taxable event. So let me give you several examples of where this applies. Selling crypto for cash, like when you cash out on a crypto exchange. This also includes NFTs. Trading crypto for another crypto. For example, trading ETH for Bitcoin. This also applies to both centralized crypto exchanges like Coinbase and decentralized crypto exchanges like Jupiter. Also, spending crypto to buy a product or a service. For example, some hardware wallet companies let you buy their wallets using crypto. Then we have income. If you receive crypto as income, that's taxable. For example, if you provide a product or a service for someone and they pay you in crypto. But that also applies to things like staking rewards, rewards from yield and interest, mining rewards, and airdrops once you can access or sell them. So what isn't a taxable transaction? Well, really anything where you're not receiving crypto or you're not disposing of an asset. Simply buying and holding crypto is not a taxable event in itself. For example, if you buy one Bitcoin at the beginning of the year for $80,000, and it's worth $120,000 come the end of the year, but you still haven't traded or sold that Bitcoin, then you do not owe money on that Bitcoin because you didn't dispose of it. You haven't realized the gains. Also, simply transferring crypto between your own wallets is not taxable. So if you send crypto from your crypto exchange account like Coinbase to your cold wallet like Tangem, that in itself is not a taxable event. But the transfer fees that are required when you send crypto is technically a small disposal, so that could be taxable. But why is the IRS cracking down so hard right now, even on smaller amounts and especially on crypto holders? Well, the reality is it's because they can and they have the tools to do it. Crypto exchanges record your buys, sells, rewards, and trades, and all of your on-chain activity is recorded publicly on the blockchain for literally anyone to see, so tracking your crypto transactions is actually a lot easier than most people realize. But you need to understand how they're actually catching people so you don't become a target. So here's how it works. Essentially, the IRS compares what you report on your tax return with what third parties report about you, such as crypto exchanges and brokers. And when those numbers don't match up, that triggers a flag in their system. And at this point, almost everything is automated at the IRS. So it's basically like a mismatch detector. And they can see things like when you get rewards, when you sell crypto, and really all of your crypto activity automatically and know if there's a mismatch. And this is the first mistake I see crypto holders make. They assume once they move their crypto off the exchange, like into a cold wallet, the IRS can't track them. But this is completely false. The reality is the IRS uses blockchain analytics tools to track addresses, transaction patterns, and to connect on-chain activity back to real people. And this is the same kind of technology professional blockchain investigators use to track stolen funds, investigate major hacks, and connect on-chain activities with real-world identities. And it gets even easier for them if you start on a centralized exchange, which most people do, because you have to go through the KYC or know your customer process, so they already know everything about you. But then if you take that crypto that you bought on an exchange and send it to an external wallet like your own cold wallet, you have now tied your cold wallet to your crypto exchange account, so now they know your crypto addresses. And even if you transfer that crypto from your cold wallet to a new wallet address without using a centralized crypto exchange, it's still all publicly recorded on the blockchain, so they can link all of your crypto wallet addresses together. There's always going to be a paper trail. Also, let's just say in your previous experience, you made some money in crypto and you didn't report it to the IRS and nothing happened. That's not because you're immune to taxes or they don't care, they just didn't see it. But now with increased reporting requirements and automated systems, it's much more likely that they're going to find these mismatches. This leads into the next mistake I've seen a lot of our subscribers make, and that is assuming no tax forms means no tax. In crypto especially, a lot of the platforms you use and activities you engage in, they're not going to provide you with any type of tax form. Now, certain centralized crypto exchanges are the exception because oftentimes they do send you a tax form and they do report all of your activity to the IRS. But even if you do get tax forms from an exchange, that doesn't include all of your activity. It's only the activity that occurred on that specific crypto exchange. So if you send your crypto to an external wallet, like a hot or a cold wallet, and you're swapping crypto within your wallet, or you're interacting with DeFi platforms and doing things there, none of those platforms are going to send you any tax forms. At the end of the day, it's still your responsibility to track your transactions, your profit, your losses, your cost basis, and report everything correctly. And I'm going to show you exactly how I've been doing that for the past 6 years here in a minute. Because if you get a letter from the IRS and your response is, I didn't know, or I didn't have the forms, they're not going to care. And if you owed money but never reported it, not only are you going to have to pay that money back, you'll probably have to pay interest and penalties on top of that, plus you have to deal with the IRS. So it's better to just report your taxes, get it done, and not have to deal with all that drama. Okay, this next mistake is really common, and I'm not sure where the misconception comes from, but that is assuming the amount of profit you made in crypto is too small to matter. The reality is, if you traded, swapped, sold, or realized any gains, that is a taxable event that's supposed to be recorded on your tax returns. Now, that doesn't automatically mean that you're going to owe taxes, especially if you only realized losses, and those losses could actually offset any gains you had. But the key point here is that the IRS treats crypto like property, and they expect you to report all taxable activity. That's why they ask about digital currencies on Form 1040. The next mistake is not tracking everything, and this is what I struggle with the most because I have a bunch of different wallet addresses, different crypto exchange accounts, and literally thousands of crypto transactions throughout the year. Now, I know some of my subscribers track this stuff manually, which is fine if that works for you, but for a lot of people, this is not realistic because it's going to take way too much time and you're more likely to misclassify transactions. And it's even worse if you're like me and you like to wait till the last minute to start gathering all this stuff. Good luck tracking all your wallets, crypto exchange accounts across all the different blockchain networks in time to file your taxes. That said, if you want to stay out of trouble, avoid getting that dreaded tax letter, and sleep better at night, this is my simplified approach for tracking your crypto and ensuring everything is classified correctly. And don't worry, I'm going to give you the exact blueprint on exactly how to implement all this here in a second. First, get organized. Gather all the wallet addresses you use and crypto exchanges accounts you have and put them into a simple Google Doc or your Notes app. Now, we're not tracking any transactions here. You're just making a master list of all your accounts. Second, keep a basic record, and you should be doing this throughout the year. Track your cost basis, your profit and loss, and this will help you determine if you're going to owe or maybe be able to offset any gains. Third, set money aside as you go. If you made money in crypto, the odds are you're going to end up paying come tax season. Now, how much you set aside is up to you. I like to assume the worst case scenario and maybe set aside a little more than needed and just assume you're going to be taxed at the highest tax rate, which is 37% for short-term capital gains. So if you made $1,000 in crypto, you could set aside $370 and have that nice cushion that you'll be able to use to pay your taxes come tax season. Of course, this is just an example. I'm not a tax professional. If you want to know exactly how much you should be setting aside, you should probably talk to one. The last step, and this is the only way I've been able to track my cost basis, my profit and loss, and categorize everything correctly, is to use a crypto tax tool. These tools pull in all your transactions from your crypto exchanges and all your wallet addresses and connects them all together. That way you know your cost basis, you know your profit and loss, you know your income, and then it even generates the correct tax documents that you're going to need to file with the IRS. From there, you can import these documents into something like TurboTax if you're doing it yourself. You can send the documents to your own tax preparer, or you can even invite your tax preparer into the crypto tax software and have them double check things for you. The tool I use has a free portfolio tracker that I can use to monitor my cost basis and my profit and loss throughout the year. So if you want to see how I've been using this tool for the last 6 years to file my crypto taxes and track my portfolio, check out my step-by-step guide in this next video. I'll meet you over there. God bless.